Hi and welcome to another edition of our weekly market outlook report for the week starting Monday the 14th of September. We have a busy week ahead of us, which starts with Eurozone industrial production and UK inflation report on Monday. On Tuesday, we should be on the lookout for China and US industrial production, UK unemployment rate and Eurozone ZEW economic sentiment survey. Going forward, UK, Eurozone and also Canada consumer price index figures, also Fed interest rate decision and FOMC press conference will be closely watched on Wednesday. On Thursday, the main point of interests are reserved for Australian unemployment figures, Bank of Japan and Bank of England rate decision and minutes, and also US jobless claims data. The week will finish on Friday with UK and Canada retail sales data. Now, let's take a look at few markets. This is euro-dollar in intraday 4-hourly time frame. We can see the price action is consolidating sideways. We have this sequence of slightly higher highs and we have the sequence of this slightly higher lows, but generally ranging. There is no trend here as such. Key trading level at the moment is at 118.75. Breakout above that level could possibly be considered to be bullish, targeting resistances towards 119.70 and then that psychologically important 120. We had the ECB rate decision and the press conference last week, which was closely watched. Alternative technical level to keep an eye on is at 1.1740, which is a cluster of these previous lows and also S1 in pivots. Dip below that level, a retest of that level from underneath as a newly found resistance could open the way for a deeper corrective move to the downside, targeting 117, 116.45, possibly even 116 to the downside. Cable looks more bearish. Cable was going sideways as well, or sterling dollar was going sideways as well, and then we saw this massive breakout higher towards 135 area, and then the Brexit news came into kind of attention again, and we saw this massive corrective move lower. Key trading level going forward is at 129. Bears appear to be in control below that level. So if we see a rally into 129 or 130 and the rejection from that level, that could be considered to be quite bearish, and then potentially we could see a continuation of this selling pressure towards 127, 126.80, possibly even 126, cluster of these previous highs, and then these lows would come in play at 125. Alternatively, if you see a push higher and a breakout, an end of day close above 130, that would possibly trigger a breakout above this falling resistance trend line that we can draw by connecting this sequence of the lower highs, potentially opening the way for a spike higher towards 131, 131.20, possibly even 132. Dollar Japanese yen in 4-hourly is just going sideways in something that appears to be a rising wedge formation. So if we connect this sequence of higher lows and we connect this sequence of slightly higher highs, we have a wedge formation or a coiling price action. They have the tendency to break to the downside if they're seen in a clearly defined downtrend. So we have high, lower high, so we connect that. There is our trend line. Key trade level going forward is around here at 106.20, 106.30. As long as that level holds and we see a push lower and a loss of 105.75, so something like this, that could appear to be quite bearish, targeting additional supports towards 105.50, 105.20, possibly even 104.70. Alternatively, if we see a push higher and a squeeze and a breakout above these current swing highs at 106.50, that would create a counter trend move higher and a breakout above that falling resistance trend line. Short squeeze targeting 106.70, 107, 107.20, even 107.50 to the upside.